No problem.
You can finish your thought. Go ahead.
Yeah, just talking about, obviously the market's sold off here a little bit in the short term, but I think when you take a look, the momentum's been strong. We were up about 7 consecutive weeks on the S&P 500, so perhaps in the short term, it makes sense for a little breather. At Schaeffer's, we did a study looking back how often is this 7-week streak in history. During the past 40 years, it's actually only happened about 11 times, so it's not that common. The question is, what's happened when that streak has occurred? Going out about 1 or 2 months, we've actually seen outperformance versus typical 1 and 2 month returns on the S&P 500. So perhaps a little short-term consolidation, but it kind of hammers home that sometimes trends can go much further and farther than most people would believe.
David, there is one problem that Elon Musk does not have that he wished he did have, that a lot of corporations do, which is that they have this cash hoard. Elon Musk, of course, has been a little cash short. But a lot of companies have millions of dollars, billions in the case of companies like Apple's, hundreds of billions. What happens if that money is deployed, and what happens if it is not deployed? Does that affect the future of the markets?
Yeah, it sure does. It's one of those silver linings. I mean, on the short run, I would agree with my counterpart. All bets are off in the short run. There's plenty of headwinds, but a few of the items that keep us somewhat cautiously optimistic over the long haul is the cash on the balance sheets of corporate treasurers and CFOs who are still on the sidelines. Once that cash really starts being deployed in a much more meaningful way, that is clearly a driver that will.
But hold on a second, because you said in a much more meaningful way. Does that mean that you haven't seen the signs so far that it's being deployed to the point where it will affect the economy and the markets?
No, there's reports of perhaps as much as $2 trillion on the sidelines of uninvested cash on corporate balance sheets in total, depending on reports. So there's been some, and we've had a pickup, and the markets have been relatively optimistic. Revenue projections were beat about 2/3 of the time this last quarter. That's another positive. But ultimately, corporate spending, which hopefully will be tied into earnings across the board, will be either a giant plus or minus over the next coming quarters.
Here's what's been a giant plus, and that's housing. I mean, granted, today we got the number out that did not look as healthy, but if you picked out at least single-family homes, those still look pretty good, Joe. And you're bullish on the housing sector. Talk about why, and does today's news shake you at all?
Like you said, in the short term, we had a Toll Brothers worse than expected report and some mixed housing data that the stocks reacted negatively to. I think that's one, again, you look at a bigger picture perspective. Historically, those pullbacks, those scary pullbacks, have been pretty good buying opportunities. And I think just all the skepticism we've seen towards home builder stocks could bode well for them going out to the longer term.
Joe Bell, David Fleisher, gentlemen, good to see you. Thank you very much. Very busy day.
Thanks for having me.